Hello, investors and traders. Just over a week ago, we shared insight about an impending rally in the market. Despite the noise and emotions swirling around the end of the bull market, we identified a significant short-term opportunity. In this video, we'll review our recent trades, shed light on our future plans, and most importantly, explain the reasoning behind our decisions. If you find value in this content, please consider subscribing for more actionable insights. Typically, our bull market experiences 5% pullbacks around 4 times annually, with a 10% correction occurring once a year. However, it's been a while since we've seen a significant pullback, and a lot of this market will be navigated through the earnings season. The outcome will significantly influence the market's trajectory. About 1 week ago, we told you the market has reached a short-term oversold position, even though a lot of the news has been telling you that this market is going a lot lower. If you shun the news and just look at historical data and different analytical information, it was clear we were going upwards. On our trade, which we recommended just off the futures contract, you would have gotten close to 19.7, and at the current price right now, before market open, $14.3. The percentage gain would be 27% in 1 week's time off a position. We also told you we were doing CFD options in the video, and these CFD options are up over 150% in 7 days. How did we see this coming? Without listening to the news, we saw a recent extreme level on the VIX contract, which works the opposite of the market, and we followed it up with 4 historical information like the call put ratio, the RIDEX ratio, a PSRSI, and the president election cycle, thus giving us a straight 27% gain. We also told you that if you do not want to play the futures contract, you could play the QQQs or the spiders, which for the last 2 to 3 days have seen significant upswings. That is great. We have also told you in the year 2022 to short the market. In 2023, we went long the market, specifically on the Magnificent Seven. In 2024, we are looking specifically more at AI companies like NVIDIA, ARM, and concentrating on cryptocurrency. Being very selective this year, believing the market at the end of the year will be close to 8 to 12% up this year. We have been really right for the last 3 years. I am not selling you a newsletter. I am not selling you a software program. I am an investor. I am a trader who posts videos to make myself a better investor, a better trader by expressing my opinions. The question is, what's going to happen in the future? Our mantra always this year was to buy on the dips, but we are coming even closer to buying selective companies, selective bullish companies. Disclaimer, the information provided on our channels for educational information purposes only and is not intended to be a substitute for professional financial advice. You need to build your own system. Even if I gave you my whole system and you do not make it your own with your own rules, with your own entry points, with your own analytics, it will not work for you. What is my system? I am a top-down approach. I look at the overall big picture, and my first job is to tell you which direction this market is going into for the year. Then I break it down into the sectors, and I find the most powerful sectors out there. And then I try to find the most powerful stocks inside those individual securities. My trading edge is over 100 indicators that are used to predict the overall market, the sectors, and the individual securities. What is your investing edge? I am looking for high probability trading, and I felt 6 days ago we were oversold in a bull market, and I have been rewarded. Thus saying that one of the days was not a very happy day, and it even shook my confidence a little bit also. Thus saying that I have always been consistent, and just because I was off a few hours, my approach has always been consistent. I have a rule-based system, empirically, theoretically, and psychological indicators are used. The start of you building your own system is a free video. Build your own rule-based strategy for investing or trading. Volume 1, Issue 1, Decoding Investing with Logic. I am not selling a course. I am not selling a newsletter, just getting to be a better trader myself. As usual, one indicator does not make a strategy and should be coupled with other indicators and philosophies. I use a weight of evidence. At certain times of the year, the VIX will do very well. And at certain times, other indicators will do very well. If you have a weight of evidence, it all gives you a probability of succeeding. So where are we on the overall market? There has been no hiding our opinion. We will be up anywhere from 8 to 12% this year in the overall markets. That is our long-term view. Our short-term view is neutral. We will gap up this morning and we will take our profits off the short term of what we did 7 days ago on this video. And we will do it again. People who have been following us for the last 2 years know we give our recommendations and they've been dead on. This is the tricky part on the intermediate term. On the intermediate term, we are selectively bullish. Why am I saying selectively bullish? Because I think you need to be into certain securities and certain sectors to make money. We have seen a lot of disasters happen, and these disasters, if you're in them, will affect your overall performance. But if you pick the right sector, the right individual securities, or if you're just looking to trade the QQQs on the 8 to 12% by the end of the year, you will still have a profitable year. Remember to build your system, to have a set of rules that guide your design-making process. Consider multiple sources of evidence, adhering to a defined strategy, following a disciplined approach. Let's start off why we're a little worried. On the weekend, when we did stage analysis, we saw that 82% of the S&P 500 companies are going lower. And we saw NASDAQ 90% are going lower. We also know from previous years' experience that there are 4 times a year we get a 5% pullback. We also know when these numbers at extreme levels, coupled with other factors, we get a pop, and we got the pop. So imagine considering this, a weight of evidence, and your indicators tell you that this year will be an overall up market. We know markets do not go straight up, and 4 times a year you'll have a 5% pullback, and 1 time of the year you will have a 10% pullback in a bull market. We know that 87% of the time, when you get these readings of 90% and 82% of a declining phase, you get a short-term pop, and we saw that. But it is still concerning if we do not switch this week and next week from bearish to bullish on stage analysis, meaning it is very difficult to pick a company going up in the NASDAQ 100 if only 10% of the companies are headed upwards. If you look at our record on the QQQs in 2023 on January 18, we first came up with a bullish recommendation over here. In 2023, if you go back to our videos, we screamed to you, buy now, buy everything. On each of these dips, we screamed to you, buy everything. From February, we've been telling you when we do have this 5% correction, buy. As you can see from our recommendations, February, buy on pullbacks, buy on pullbacks. March, buy on pullbacks. April, buy on pullback. So nothing has changed. We bought on pullbacks and we were rewarded. Now, thus saying that, we are in the 9th inning of this bull market. Next year will not be a positive year in the stock market. And if you were just a long-term investor following us, you were up 50% as of yesterday. 50%. Let's continue. What are we looking for when we buy? Are we in a bull market? Even though we had a correction, we consider ourselves still in a bull market. A selective bull market, yes, but still in a bull market. A week ago, did our oversold indicators tell us to get into the market? Yes. Is the QQQ NVIDIA technology companies cheap? Are they at their 52-week lows? No. They are coming close, some of these companies, to 52-week highs. Are we prioritizing uptrend? Yes. Do we have stop losses in play? Yes. And even though sometimes we win and a lot of times we win even more, for the few times we lose, we do not change the whole system around. We maintain consistency. Let's further look at the market volatility. When we posted our video, the 50-day moving average, we were at extreme fear, thus pulling the VIX down to 16 where we're neutral. As of today, it'll be more closer to 14. With the actual contract itself on the VIX, we were close to the 20 range, and as of today, we'll be closer to the 15 range. That's in 1 week's time. So imagine each and every time you do the same thing. In bull markets, when the VIX gets very high and other factors line up, you buy into the QQs and spiders. The trick is this. If we are in a bull market, do not short when the VIX gets low. Don't short into this bull market. The trick is to buy. Next year, we're going to flip the switch. and it will be the opposite, where we'll be shorting into everything and not buy it, because it comes from the overall top-down approach. Let's go further into short-term indicators. We are very neutral right now. 1 week ago, we screamed to you bullish. So now that we went up 3 days and Tesla announced positive news, we are at a neutral level. When these numbers get to zero again, which we will post, we will be buying. When these numbers get to 100, we will be selling. It's the probability of succeeding. And this is based off no emotion. I have no emotion when I trade. Another very useful indicator was the CCI index, which is screaming right now, bullish, bullish. The CCI indicator broke through zero, went all the way down to 200, which again told us to buy into this market 3 days ago. And now, are we going to test the 100? Are we going to test the zero? Or are we going up to the 200 level? But clearly, we're not going lower from here on the intermediate term off the QQQs based off the CCI commodity channel index. You go to the next one, overbought, oversold. Only the NASDAQ, which I gave you a snapshot here, is bullish on the oversold for the short term, medium term, long term, and the exit swing signal. Again, another reason just to wait for the short term, intermediate term to be selective, and on the long term, be bullish. We go further on the components. Again, knowing what we did previously will help you for the next time that you decide when there's so much bad news in a bull market, what are you going to do? Broken record. We buy on pullbacks. No matter how bad the news was, no matter how much they're going to try to tell you it's the end of the world, and a lot of bad things are happening in this world. A lot of good people on all sides are losing their lives. That is horrible. But this channel is not about the news. This channel is not about a political stance of Trump, Biden, Palestine, Israel, Russia, Ukraine. This is ignoring the news, not ignoring our feeling, because I do have certain feelings about political events. But this channel is about making money. And when this number for the components went down to 24.54 and we told you to buy, it was a great opportunity. But right now we are at neutral. If you look at a lot of the Magnificent Seven, we're majority in growth phase, but we will see if Tesla and Apple can further into an advancing stage. The double AI market sentiment ratio, even though that it improved, is still bearish. The put call ratio last week has turned bullish. The RIDEX ratio still under a level of bullish, and the stock price strength is bullish. The next few videos will concentrate on what we are buying, and we are selectively bullish. But when I told you a year and a half ago to buy NVIDIA, we were right. When I told you a year and a half ago to buy QQQs, we were right. And the next video, we will find certain securities to hold for the short term, the medium term, and the long term. You know the catchphrase, study it, analyze it, adapt it. Peace.